Let's talk about how to trade oil futures. Today is March 5th, Oil News Day. Picture perfect reminders that we'll witness in a couple of minutes that to trade oil futures, you must trade with extreme caution. And if you are trading oil futures, it means you're already an accomplished trader. So here's oil inventory coming up in 2 minutes at 10:30 EST. 99% of the time you will witness extreme volatility on oil. Current expectations 1 ME. So let's take a look. Let's bring up the smallest chart that we trade in our day trading room on oil. Here's oil. Currently, reminder, what stages such sharp volatility? Oil currently has only 300 contracts. When you trade the instrument that has such extremely low liquidity, be prepared for extreme volatility because 20 contracts will move this market. That's why when I have students who are beginner students who come to me and say, I love oil, I say, well, it must be you doubled your account elsewhere. You can't love the instrument for its volatility if it is not making you money. Look at your account and ask yourself, do you like oil only for adrenaline factor? Or do you want to be profitable? So what we encourage you in the course is learn on S&P. Take a look at the volume on S&P currently. 10 times as much. S&P volume could be 100 times as much. S&P is incredibly well-behaved instrument, unlike oil, because oil can be manipulated so easily, therefore requiring extreme instant decision making. But it doesn't matter if it's oil or S&P. Oil respects Fibonacci levels, just like an S&P would. And what did we discuss? That oil showing potential heading to 102. Oil news is out. Let's see what oil will do next. Oil is heading, dancing, very fascinating formations. Let's see. No news yet on oil. It was something else. Here's a dance on oil. Showtime. It will get very exciting, I promise you. I expect news at any moment. Oil news is out, 1.43. We have plenty of oil. And what are we witnessing? That oil is finding support? We're witnessing very sharp and very drastic moves. And we know better not to touch the oil the first minute after the news release. We will allow oil to get settled for a couple of minutes and we'll monitor for a trade formation. As you could see, while S&P forming and sitting very pretty, this is what oil had done in the last minute. S&P still forming single formation while oil formed 10. There's absolutely no meaning here. This is news dance. I will allow oil to settle down and I will monitor for entry because I know that oil is to be treated and traded with extreme respect and extreme caution. And Oil News Day is perfect evidence of that. Here's typical jerky move on oil. So while S&P is still sitting in a single formation, oil already formed 10 more. This is a formations on oil in the last minute. This is formation on S&P in the last half an hour. Is that clear? How huge the difference is and why oil requires extreme skill and knowledge. So here's a picture perfect example. Volatility stepped in on oil. So here is S&P sitting very pretty. This is a single formation on S&P. And this is what oil had done while S&P forming this one, oil done all of this, and potentially will do a lot more. As we discussed, I wasn't buying any of the bullish fluff. I was letting oil to settle down. I expected the volatility to pick up. So here it is. The reason why this is happening is because liquidity is low. Because very, very few contracts will create very sharp formations. And here it is. Oil is giving me more promises by each and every moment. As you know, what's really important to monitor for is the meaning. No meaning yet, but slowly but surely oil will make up its mind. Potentially it could be 10 more minutes. As we know, that's what oil likes to do. But this is picture perfect example. 40, 50 formation and potentially few hundred, while only one on S&P. So here we continue monitoring the difference between two instruments. S&P is still forming single formation, while oil had potentially 100, and potential will have few hundred. That's how much formations oil had formed, while S&P is still forming one. The beautiful thing on S&P, you can trade unlimited lot size, but you will be tested for patience and discipline. On oil, you can't trade more than 9 lots. That's it. You will stand out in the crowd. Because when the liquidity is that low, 95 contracts at this moment. Do you understand how critical it is to understand what you trade? Does that explain the volatility? 95 oil 8 while S&P 62,000? That's the reason why only experienced trader should be trading oil. And it doesn't matter if you're trading oil 10 years later, you have to treat it with extreme caution. Very, very sharp bullish trade as we knew it would on oil. Because oil had reached reversal zone. Oil had formed over 100 formations unlike S&P, but as you could see, it doesn't matter how volatile the instrument is, it still respects very important Fibonacci levels in the market structure. And it doesn't matter if it's hourly, it doesn't matter if it's daily. Here's a pullback we discussed that oil would give us at any moment. So here's our fascinating trade on oil. We've been in for very, very long time, which is incredibly unusual on oil. We witnessed extremely sharp volatility. This is what oil accomplished on smaller time frames since the news release, since 7:30. This is what oil had done on 8 range chart. The trade I had taken on 21 range, and as you could see to the tick, it came to my first target. While S&P had done only this during this hour. And that's a world of difference between the two instruments. But it doesn't matter what you trade, as formula remains the same. Oil, extreme volatility with very comatose market conditions is common. S&P, completely opposite. Very, very slow, very steady moves due to very high liquidity, which gives you opportunity to trade large lot size. Oil requires experience, instant decision making, and you can only trade up to 9 lots or you will stand out in the crowd.